Okay. Thank you very much, and thanks for the opportunity of presenting to you today. Let me just tell you a little bit about YellowCake. It's a very, very simple story. YellowCake is a London-listed company that acquires and stores physical uranium for the long term. So we buy the uranium and hold it. We don't have any exposure to mining projects, to processing risk, to geological risk, and really provide investors with an opportunity to invest in the uranium commodity directly with no other associated mining risks. We have a deal with Kazatomprom where we can buy up to $100 million of uranium per annum, essentially at the spot price. So that allows us to grow the company. The spot market is not very deep and not very liquid, so purchasing that amount of uranium would certainly move the price a lot. We store our uranium in Canada and in France. In Canada, it's at the Cameco facility just outside of Toronto, and in France with the Orano facility. There are only 3 facilities in the West where you can store physical uranium, the third being in the US. And we have a very low-cost structure. We've only got 2 full-time employees. We've outsourced our transactional activities, our IT, and our bookkeeping and accounting. And we really target a cost base, or cost leakage, if you will, of less than 1% of our net asset value. Last year, because we grew significantly in the year before, our cost base was about 0.6% of net asset value. And talking about net asset value, if I just turn to our balance sheet quickly, and you'll see that we own on a pro forma basis about 20 million pounds of uranium. At the current spot price, that is about $1 billion. We have an additional about $18 million of cash. So our net asset value is just over $1 billion at today's prices. And that's all we have. We don't have any debt structures, we don't have multiple classes of shares, and we don't have any hedging. Now, when we IPO'd in 2018, we took a view that uranium was a commodity, commodities are cyclical, and uranium was at the bottom of the cycle. At that stage, uranium was about $20, $21, and underpinning that thesis was the supply-demand fundamentals. We saw a visible and growing demand side, and we saw a supply side that was struggling. Now, as we fast forward to today, so in the intervening almost 5 years, there are 4 factors that have driven that demand side. So when we IPO'd, demand forecasts were about 1.5% per annum. Today, they're more like 3.5% per annum. And that is driven by the climate change and decarbonization goals that many countries are adopting. I think more than 70 countries have adopted these sorts of goals. And on the back of that, we are seeing a rapid increase in reactor build programs. We're also seeing countries supporting their existing energy fleet and nuclear fleet, and the advent of small modular reactors. Since the Russian invasion of the Ukraine last year, energy security and energy independence has become a significant issue. And this has impacted uranium and nuclear in a positive way. Long-term contracting, this industry runs on long-term contracts, and we are starting to see long-term contracting returning to levels where it needs to be in order to replenish inventories. And finally, talking about those 4 positive demand factors, the supply side continues to struggle. So when we IPO'd in 2018, there were a bunch of projects that were on the table. All of those projects are still on the table. Not a single project has advanced in any material way in terms of putting the asset into production. So we do see this as a supply side challenged commodity, and therefore uranium prices need to increase. Quickly on the climate change side, we've seen a number of countries adopt climate goals. Nuclear power generates the least CO2 emissions compared to all other energy sources, and that is now being appreciated. Nuclear is being appreciated for its low carbon, reliable, base load energy source in terms of meeting those decarbonization goals. On the back of that, we've seen aggressive reactor build programs, particularly in China, India, and the Middle East. If you go back 10 years, China had 18 operating reactors. Today they have 55. They've got 21 under construction. They aim to double their reactor fleet by the end of this decade. And, you know, is that doable? I believe it is. China is building reactors, you know, in around 6 years. They've developed the expertise to build these on an industrial scale. And it's not just China. You know, we're seeing build programs in India, in the Middle East. But beyond that, the traditional nuclear countries of the US, Europe, Japan, we're seeing there an appreciation of that existing infrastructure. The Inflation Reduction Act in the US is significant. It's providing a lot of money to support the existing reactor fleet. In Japan, we're seeing restarts. In Europe, we're seeing Finland, Sweden, France, the Netherlands, Belgium, all really looking at their nuclear fleet and making plans to support and extend the lives of those fleets. Just turning on to small modular reactors, that's a very exciting development in the nuclear space. And it's very real. We believe it is. There's something like 70-odd reactor programs being developed by countries such as China, the UK, US, Canada, by big companies such as GE, Hitachi, Rolls-Royce. We believe that this will be a reality by the end of the decade. There are a few reactors already being constructed, and there are existing reactors on ships that are powering cities in the Arctic. So this is becoming a reality, and the Barclays Bank investment research team believe this could be a $50 trillion, or a $1 trillion market by 2050. Let me just talk about energy independence and energy security briefly, and about Russia's role in the nuclear fuel chain. As you can see, that the nuclear fuel chain goes from the mining side, where we produce U3O8, which is the product that we own and hold. It then gets converted into a gas, enriched, and reconverted back into fuel rods and fuel bundles. If you look at the conversion and enrichment cycle, Russia is about 35% of global capacity in conversion and 45% of capacity in enrichment. So a material player in the nuclear space. And the Russian invasion of the Ukraine last year was a game changer in the nuclear industry. I think, you know, the Western utilities suddenly realized how beholden they were to Russian fuel. In the US, something like 20% of the nuclear fuel that goes into the US comes from Russia, and in Europe, that's about 30%. So we're seeing a huge swing by Western utilities seeking Western sources of nuclear fuel. Russia's not a very big player on the U3O8 side. They only produce about 13% of global supply there, but much bigger on the nuclear fuel side. So with that, we are starting to see a deglobalization of the nuclear fuel industry. Going forward, you know, it is very likely that the Western nuclear utilities, Japan and some other countries, will seek to you know, remove themselves from Russia and will seek Western sources. The problem is that these Western sources don't exist today, and they'll take time to develop. Now, you know, conversion and enrichment are industrial processes. The technology is available, they can be developed, but it will take time and it will take money. To date, there has been no sanctions on Russian nuclear fuel. So Russian nuclear fuel is flowing into the US and into Europe without any sanctions. But that sanctions pressure is building. In the US, we've seen a bipartisan bill being presented to sanction Russian uranium, and in Europe, the European Parliament is also looking at that. Now, those bills haven't been approved or seen the light of day, but it's a sense that you know, there's a possibility that Russian fuel could be sanctioned. And I guess evidence of the concern of you know, governments around uranium independence and security, the US government has started procuring uranium for a strategic stockpile. They recently purchased just over £1 million from 5 US producers and paid over 30% above the spot price to secure that material. I talked about long-term contracting. This industry runs on long-term contracts, so utilities procure about 85% of their fuel needs under long-term contracts. Historically, we've seen low rates of contracting. So reactor fuel burn is around 175 million pounds a year, and the contracting rates recently have been around 70 million pounds, which has led to a depletion of inventories held by utilities. Last year, we saw a 60% jump in contracting. The level was around 114 million pounds. I think that number was underreported. It's probably closer to 130. And I think this year we're going to see a number above that. So going forward, we do see a number of years where contracting has to reach replenishment rates and probably in excess to rebuild inventories. And putting all of that together, going back to my earlier point about this being a supply challenge industry, if you look at supply and demand and just focusing on that yellow box in the middle, the estimates are that by the end of this decade, we're short of 33 million pounds of uranium per annum. Now, bear in mind that Kazakhstan, which is the world's largest producer of uranium, 42% of global production, produces 55 million pounds. So you almost need another Kazakhstan by the end of the decade. And that assumes that these probable projects that represent almost 26 million pounds all come on stream. And we know in the mining industry that, bringing projects on time and on budget, the industry doesn't have a great track record in that regard. So I guess just pulling all of that together, we believe YellowCake is very well positioned. We only hold physical uranium. We don't have any operating risks. We've got a very small team and a very low-cost structure. And we're seeing, the mood swing towards nuclear in terms of decarbonization, energy transition, now more recently, energy security, energy independence, and the appreciation of nuclear's role in those two regards. So, YellowCake owns 20 million pounds of uranium. We will look to grow that over time. We issue shares at a premium to equity, a premium to net asset value, and don't issue shares when we're at a discount. So we're very excited about these, confluence of events which are driving the nuclear space. Thank you.